Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Friday, June the 9th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place, and then we wait to see what the market does, and then pick the plan that best suits what the market is doing and execute on it. We do not do this to try to hedge the bet. We just do this because we come in with no bias and we want to have a plan for whatever the market throws at us. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in the go-to each morning, and we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody from Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, first things first, let's talk about what happened yesterday. Yesterday we were looking for a rotation down, finding responsive buyers in Hypo 1, and then rotating up, through towards equalizing the two all-time highs, the one in September from 37.50 and the one in June at 39.75. We got up to 36.75, and then, of course, we had Comey talking all day, and created some volatility. We rotated all the way back down. It looked like Hypo 4 was going to start kicking in at that point in time, and but the buyer stepped in yet again, did not give us the neutral day. They left that neutral day alone and then rotated up. And what we got in the end was some pretty good balance around the prior day balance and strong kurtosis around this 31. And you can see that we still have this double distribution, but the lower distribution where we had undetermined fair value between 3 or 4 points has now become prominently, price acceptance around the 30.25. And now we've gotten above the key LVN inside of this double distribution and working our way back up towards the HVN on this end, which could shift this VPOC up to the 34.25, accept price here, and then continue up to equalize the two highs. Now, there was something that happened in the Globex. Now, y'all know that I love the Globex gap. The Globex gap is between the 5 p.m. close Eastern time and the 6 p.m. open. And it's a trade that actually has, believe it or not, a 99.5% probability of taking out the Globex gap. So if we close below the 5 p.m. Eastern time or above the 5 p.m. Eastern time, okay, and leave a gap. And when I'm talking about this gap, I'm talking about the gap against the candle. So it's a range gap, and it has a 98% probability of getting filled. Now, usually the gap is only 1 or 2 ticks. Something obviously because of the UK election coming out, we got a much bigger gap, and this created a second phenomenon, which I call the broken profile. And the broken profile, okay, increases the odds that you're going to get, okay, a close of this gap. Just think about this. Even if you don't go back and do your back testing on it, which I always suggest you do, how many times do you wake up in the morning coming in to do your research and to get ready for the RTH session where you see that the overnight profile is broken in two? It is extremely rare. Now, I've never run a study just on this alone. I have on the gap. Well, I didn't run it. I had somebody run it for me, but just as much I trust those people. But so last night, there was talk about the short, And I was saying, be careful in the Globex last night, because we're more likely to go down and then pop back up, but more likely to go up to close this and repair this this zone. And you can see that if we take a look at the overnight, you can see that after rotating down, okay, we went up and we repaired the gap, accepted that price around the VPOC from the RTH session, and then continued up into the 34, rotated back down again, held that value, and then we've been chopping and moving our way up, and we've got a P-shaped profile, okay, on the overnight session. And overnight session is roughly about 60% net long in price and time. But very important to remember. Now, it's, you have to, I actually sat in this trade, okay, forever. And I, went up, I got filled, and then I had my runner, and then I added back on down here, and I sat in it, and I finally closed it. I actually closed mine out at the 33 and a quarter. But it was a great trade because of the fact that I had conviction, because of the fact that I knew that that had a high probability of being repaired, because you don't see broken profiles. The market has to go and repair the auction, and that's what it did. Now there was headline news that I had to worry about, but once I was in and funded, it was just for me it was just a patience game, and waiting for them to repair. Would I have sat through a big drawdown on this? No. What I would have done is I would have got out, and then I would have looked for opportunities all night long, okay, or however long I was trading, to rotate back up towards repairing that profile and closing the gap. Anyway, I just wanted to share that with you so that you understood it. I'm going to just do an abbreviated session here. You can see the double distribution. Key line in the sand right now, or over underline, is going to be 32.25. Target below 30 and a quarter. Target above 34 and a quarter. Anything above yesterday's range high of 36.75, I'm looking for the repair of the unequalized all-time highs between 37.50 and 39.75. Anything below, if we do not hold 30 and a quarter, I'm looking for a rotation back down into the 25.75 to test the value. Now we have wicks above and wicks below. So we're going into Friday, so we have to look at where critical mass is, and we could get stuck in this upper distribution and just chop around here, or we could get stuck in this lower distribution and chop around here and get stuck in these wicks. A lot of fight back and forth in terms of the bears and the bulls right now, and you can see that in these large tails and wicks that we've got. Now, if we break out, then we could get a continued move, and I wouldn't try to fade that move at all. So let's just take a look at the overnight, where overnight high is 35.75. Hold on a second, I'm just going to move the stop here. Like I said, I was working a position here, and I wanted to wait until I got funded. I'm running short on gold right now, and we just got an alert that we went down to the 70 area, so I'm just going to move the stop down here. Okay, so our overnight high is 35.75. Our overnight low is 23. Remember, I'm running on September contract now. Our VPOC is not likely going to, it could shift here, but it's not likely going to shift. 31.75, sitting right on the value area from yesterday. We've got a key LVN here at 29, but just below we've got the value area low at 27.75. So I'm going to incorporate the, basically the 29 down to the 27.75. Target below that is going to be 27.75. That's too close. 26, yeah, 26. And then, of course, we've got the 25. Takeout of the overnight low at 23. And then all our levels down here remain the same. Our ATR, 20-period full session ATR, is running at 1516. So off of the high at overnight of 35. Our downside daily ATR is down at 2050. And our upside daily ATR target is 3875. Right here, right smack in the middle. Okay, also it's the end of the week and we have 1 day left of trading and our daily ATR is 1516. Our week open is 2433.50. So our upside critical mass, weekly critical mass, is 2448.75. Way up here. Not likely going to take this out, but I'm going to put it in here. Get you guys thinking in terms of critical mass. And then our critical mass to the downside is more attainable, and that is at 1834. So 18 and a quarter. Okay, and those are levels to the downside, levels to the upside. Obviously, we've got to pay attention to the, I'm not using the value area low. I'm going to be using the key LVN. I don't need this, so let's get rid of that. Move this over. I'm going to be using the 32 and a quarter instead of the value area low. Two reasons. One, this is price acceptance overnight. So I don't want to use that. I want to use the higher level at the 32, and I'm actually going to use the 32.75, which is the range high from 2 days ago. And then above that, obviously targeting the 34 and a quarter, and then take out of the overnight high, and then anything above the prior day range high, I'd be looking for targets above, and then how high we can go, I don't know. All right, so hypos. Hypo 1, open auction in range, move down. This is going to sound exactly the same. Move down to the 31 to the 28. Find responsive buyers. Rotate us up and go up and put in and equalize these highs and close somewhere back in range, but with range expansion to put a new high in. So open auction in range, rotation down, find responsive buyers down between the 31 and the 28 area, rotate us back up through, put in new highs, chop around, and then come back down and close somewhere in this distribution here, possibly even back in at 34 and a quarter. Hypo 2 is going to be a light trading, okay, and stuck in the wicks and stuck inside of yesterday. And I don't know if the rotations will be in the upper distribution or the lower distribution. All I would say is Hypo 2 is rotation within the prior day as we go sideways. Hypo 3 is a open test drive, failure to take out the overnight low and shoot us up into new all-time highs, chop around up here, and then push up and come up into the 2450 as a breakout day. And then Hypo 4 is an open auction, a push up failure to break out or just break out and equalize those highs and find responsive sellers and start working our way back down, chopping around in the 31 and then pushing through down to close somewhere down here in the 24, 25, but testing the lower ends and coming down towards that 2175, which is our 50% of the significant breakout candle in the June, and possibly even the 50% of the adjusted down here at the 19, but close lower and close below the prior day range and below value of the 5-day profile. So that's what I'm looking at. Gold is breaking down. It's trading 69.2 right now. Hold on a second. I want to adjust my stop down. I'm just trying to start locking in profits here. Okay, gold. You can see we were talking about the fact that if we couldn't hold up here, we'd rotate back down into this balance in around the prior VPOC where the accepted price. I expect gold to chop around in this area now that we've made the move. But if we do not hold 67.3, look for them to come down and test. The first target will be 65.6. 62.25, and of course the major number down here, which is the composite VPOC, or the most traded price, going all the way back to October 2008, back down in the 1258 area. If we bounce here, I wouldn't expect a really big bounce, but we could come back up into the 75 area. If we if we get above the 75, then I'd be looking to come up into the 76.5 and 77 area. But again, I'm not expecting a big move. This is a strong move down, and we're likely to chop around in this prior balance in this VPOC, in this microcomposite VPOC and this microcomposite VPOC where we're trading right now. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.